If you're a homeowner or thinking about buying a home in Lockport, here's your January 2026 market update. January gives us our first real look at how the year might start, and there are a few interesting shifts happening now that are worth paying attention to. Let's start with month supply, which tells us how long it would take to sell all the homes currently on the market if no new homes were listed. In January, we're at 0.8 months of supply. That's a big drop from 1.4 months in December and also lower than 1 month flat this time last year. Anything under 4 months keeps us in a firm seller's market, and this low level of inventory is a big reason buyers are still facing competition. Next is the median sales price, or what homes actually sold for. In January, the median sales price in Lockport was $305,000. That's down from $345,000 in December, but still slightly higher than $299,000 in January of last year. This dip is very typical for this time of year, especially coming off the holidays. The median list price in January was $359,900. That's a noticeable increase from $320,000 in December and also higher than $344,500 last January. This tells us that sellers who are listing right now are coming to the market with stronger price expectations, even though buyer activity is still warming up. Looking at the list to sale ratio, homes sold for 98.4% of their list price in January. That's slightly higher than 98.3% in December, but lower than 99% this time last year. While buyers are still negotiating, homes are continuing to sell very close to asking price overall. Wondering how long are homes taking to sell? The median days on market in January was 23 days. That's up from 14 days in December and 12 days last January. This increase lines up with seasonal slowdown we usually see in January before activity starts to pick up again. As of February 12th, the average 30-year fixed interest rate is around 6.10%. Last month, rates dropped about 0.25% and moved back up to where they were, but then dropped back down about 0.1%. So we're definitely seeing some volatility with rates right now. This kind of fluctuation has kept some buyers cautious, while others are choosing to move forward and refinance later if rates come down. The period between Thanksgiving and New Year's is always the slowest time of year in real estate, so it's no surprise that we're seeing lower prices, fewer homes available, and longer market times showing up in January's data. On a broader level, home prices rose in 73% of metro markets during the fourth quarter of 2025, and the median home price in the Midwest is $317,100, putting Lockport just below the regional average. We're also seeing an interesting trend in new construction. In the Midwest, builders sold slightly more new homes than last year, but with slightly smaller square footage. Will County stands out even more, showing a significant drop in median square footage, which could point to increased demand for smaller, more affordable homes, especially for first-time homebuyers. Looking ahead, there are a few things to watch closely. The current Federal Reserve Chair's term ends in May, and President Trump has stated that he wants home prices to stay strong while pushing rates lower to improve affordability. His recent nomination of Kevin Warsh suggests that approach could continue. Locally, the spring market typically starts to gain momentum toward the end of February. Last year, activity picked up earlier toward the end of January, but so far this year, we're off to a slightly slower start. That could change quickly as buyers re-enter the market. It's really common for the market to pick up right after the Super Bowl. Whether you're thinking about buying or selling, or just planning ahead, understanding these trends can help you make better decisions. If you want a personalized home value, help creating a game plan for this year, or market update for a different suburb, please feel free to reach out. I'm always happy to help you navigate the numbers and figure out what makes the most sense for you.